China's RatingDog PMIs revealed continued expansion among smaller private sector firms in September, although overall activity remains muted compared to prior decades. The manufacturing PMI rose to 51.2, hitting a 6-month high, while the services PMI came in at 52.9, extending the current expansion streak that began last year. New orders and new export orders both increased, signaling ongoing demand in the private sector. Input costs rose moderately and output prices edged higher, pointing to modest upward pressure on inflation, which is showing signs of bottoming, according to recent data. By contrast, the official NBS manufacturing PMI rose marginally to 49.8, reflecting a slower pace of contraction relative to August. The non-manufacturing PMI, which includes the construction sector, declined slightly to 50, indicating unchanged activity levels relative to a month earlier. Dominated by large state-backed firms, these readings show a more subdued picture of overall activity. Taken together, these surveys suggest that private sector activity is supporting growth and adding modestly to price pressures. Rising orders and slightly high input and output prices suggest that demand is not deteriorating further despite ongoing property sector weakness and trade tensions with the United States. At the margin, this is a positive for cyclical assets such as commodity prices, emerging markets, along with the Australian dollar